Greetings, members, one and all of the Salivation Nation. Gold and silver recover some losses from after some discouraging economic data. Let's explore. Yes, this comes to us from CNBC. Gold gains 1% as Wall Street rally fizzles and the dollar dips. And as we go through this, here we go again. It's another yo-yo in the markets. But in a sense, we're kind of moving back into a sort of an era of normalcy, at least with the precious metals markets and how they react on a daily basis, it seems like, and that we saw before this pandemic started. But there's a lot of things that are different nowadays. So we take the market in stride, and we can make movements, make buys or not buy, or even sell during times where we feel that the metals are going up or maybe a little bit overvalued, and make buys when we think that this is a dip that's only temporary and it's going to go back up again. And that was kind of my attitude for some recent purchases I made. But nonetheless, here we go from the CNBC article here. Gold rose more than 1% on Thursday as the dollar retreated, and Wall Street paused its recent rally as this dismal U.S. trade deficit data overshadowed slightly upbeat jobs numbers and optimism about an economic rebound. Spot gold rose 0.5% to $1,706.05 per ounce, recovering from a slide to a near one-month low of $1,688.89 in the last session. U.S. gold futures were up 0.4% at $1,710.90. Equity markets are still trading in the red, and for the gold market participants, that's interpreted as a bout of risk off and is leading to an increase in investment demand, said Daniel Gali, commodity strategist at TD Securities. After a strong rally on Wednesday, U.S. stocks opened lower despite U.S. weekly jobless claims, dipping below 2 million for the first time since mid-March. Reigniting worries about an economic slowdown, the U.S. trade deficit surged in April as the COVID-19 pandemic upended the global flow of goods and services, pushing exports to a 10-year low. The dollar also held near its lowest in about 3 months, making gold cheaper for holders of other currencies. While gold has shown it can rally in a risk-on environment as well, an equity market correction could also weigh on gold in the near term should liquidity needs materialize again. Standard Chartered analyst Suki Cooper said in a note, forecasting prices to average $1,700 in the third quarter. So that's interesting. That it's fascinating when we see the price fall a little bit with gold, or even go down a couple of days. The forecasts really do change very quickly. On its way down, they predict even lower. On its way up, they predict even higher. Seems to be another avenue of psychology, and it does have an effect on us. And this is why we should not let emotion, sway us, have any influence on our buys. We should just go with whatever we can afford and whatever we want, especially if you are a stacker or you drift in between the worlds of stacking and collecting, as I do. In fact, more of my world is in the collecting than the stacking. And, I buy pieces that have certain meaning or certain, if there's some sets I want to kind of put together. And that's kind of where I'm at and what I've been doing. However, I've been concentrating more on gold, certainly in the last few years here, because I do feel that when I do dabble in those realms, I can get a collector coin and pay a pretty hefty premium, one would think. But when you break it down based off of the silver to gold ratio, it's really not that bad of a premium when you think about it, and which further protects me if I need to sell or want to sell in the future. The article continues, earlier in the day, the European Central Bank beefed up its bond buying program to support the Eurozone economy, briefly boosting equities. Long-term picture for gold remains quite good, Commerce Bank analyst Eugen Weinberg said, adding exchange-traded fund demand is very strong. So that's important, guys. And even though most of us in this community are more about the physical, face it, it's the exchange-traded funds that kind of pushes the spot price there. Holdings in the SPDR Gold Trust ETF rose to 1,133.37 tons on Wednesday, the highest since April of 2013. Now, that harkens back to a video that I posted about, this glut of gold, and then a counterpoint on that as well. But, let's just for a moment humor me here and say this is true. This says that there's a lot of demand for gold out there. Elsewhere, palladium fell 2.6% to $18.99 after dipping to a near 3-week low of $1,815.66 earlier, while platinum rose 0.4%. Silver remained unchanged. Let's take a look at those prices now, because it's interesting to see where things are in the market. And you can see here that palladium, I'm showing $2,000, but they're talking about the bid price. But you look there between the bid and ask, it's getting closer to parity between gold and palladium. When will palladium and gold go to parity? If we see the platinum continue to rise and palladium continue to fall, I think that is where we'll see the parity between gold and palladium make its move. And it's fascinating to see here to where we go. But regardless of price, and you can see there that rhodium is not reached that $10,000 level yet. There's a $3,000 difference between bid and ask there. But just because one metal is more expensive than another, and just as the same with currencies, for instance, the 1 pound is valued at 1.5 times, at least on average, dollars to buy 1 pound. Well, that does not mean that the dollar isn't the king of all currencies out there. The strength of the dollar is not based off of its exchange rate. Same thing here with the precious metals. Palladium is a very rare metal. Rhodium even more rare. Its uses are pretty much almost singular to as a catalyst, but they are obviously have other applications, but vast majority. Whereas silver is probably the most versatile metal of all the precious metals, but gold is by far the king of precious metals in terms of its hedge status as money, which is the most important thing, but it also has many different applications in the biomedical field and in industry out there. So very interesting indeed. So there you have it. The metals are making somewhat of a rebound. And in some ways, it kind of surprised me that they would recover this quickly. It makes me happy that I made a purchase yesterday, for sure. Especially if these metals prices keep going up. The markets are finicky. And this finicky market strategy, I think, is telling us that we might be headed to some normalcy here with all the turmoil going on, especially in this country, United States. Right now, we're not out of the woods with the coronavirus. In fact, some predict that we'll see an increase in cases now that a lot of these protests have been happening and people are not practicing social distancing and the like. We'll see how it plays out. But by and large, they are what they are. They go up for mostly the same reasons they have been going up before, and that's where it is. Silver did break through $18. It's now comfortably below that level again, but it's starting to make a move back in the other direction. We'll see. So post your thoughts below. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment.